Hi guys, how are we doing? Um, so before the real lesson I'm about to release for everyone starts, I want to go over a few things. I am trading synthetics for now, but the main reason why I'm trading more of synthetic for now is because my levels on my pair that I trade on spot forex are not yet there. And when it eventually came last week, it missed me by a pip. I was expecting for the market to get in here, then I will join. I have a sell limit on GU, but it didn't do what I was expecting. I missed it. But I don't know, the market can use this as a liquidity and come all the way up, swipe this to get into my level before going down. But this is overall what I was expecting on GU. I was expecting it to come in here before going further down. Then I even have another higher level. So there's still room for it to, move higher. Maybe it can come for this other block inside this week and move higher. I will look forward to it coming week. Same thing for AU. AU, I have this level above as well, two levels as well. So also one thing I want you guys to notice before I am going to get into any trade, even when it is in my level, I will go to the lower time frame to look for confirmation before getting. I don't do the risk entry whereby I will just get in anyhow. So I'll wait. So what I do is I will use 0.5% of my account to set the sell limit here. So even if it's swiped, it is nothing. So when it now gives me my confirmation on the lower time frame, that's when I will go higher risk. You understand? So that's what I do. GJ is actually active. My 0.5% is active right now. But I'm still waiting for a break of this high. So if it breaks this high, this liquidity side, and gives me another block, I'll go higher. But as of now, I'm buying at this level and I'm holding. So let's see what it does. So that's what I have on GJ. I think that's all I have on Forex for you for the week. I have a video that is coming up right now. After this, I would want you to watch it. You can use the same technique explained inside this video on Forex, anything Forex, spot Forex, futures, Bitcoin. Just look for those three confirmations and get in. Once you understand that, you have nothing to fear. I just feel like it's been a while I've actually released an educational video like I used to on my channel. All I do is just do weekly outlook lately. So I want to use this opportunity to, give some free knowledge to everyone out there who has been following this channel for a while. I hope it's helpful. I hope you're able to use one or two things from it. If you can stay consistent with looking for this before getting into any trade on any pair, be it Forex, synthetic indices, anyone. Then one more advice I can give you is if you are going to trade synthetic, just like Forex, just look for one or two that moves the way you like and stick to it. You don't have to trade everything just like Forex. I hope you are getting me. Look for one or two, stick with it, and you should be good. You should be good. So the reason why I am actively in synthetics right now is just because if you look at it, I told my students when I started trading this that I loaded in $30, right? And I started making profits from the trades I was saying. I was just applying my Forex knowledge on it, and it was giving me. So he gave me all these, and with $30, I withdrew $500 first. Right? So you can see I wrote it for them. They deposited $30 on Saturday, and I'm withdrawing $500 on Monday. Let's see what we can do with the remaining $67. So after I withdrew this 500, after depositing the $30, this was when I deposited it. You can see $30. That was what I put in. So I withdrew 500, and I was like, okay, let me see what I can do with this $67, which I think after a while, because my students are allowed to drop in. So I withdrew another 250 out of the 67 that I left in there. I did another 250. You can see another 250 withdrawal out of the 67 I left the other day, which has amount to $750 that I made from the $30. So I pictured that with synthetic indices, I feel like you can make good money from little money if you are very disciplined and you are waiting for the right time to get into the trade. I'm not encouraging you over leveraging, but you will know when you can put in more positions with synthetic indices. It's that easy to read. So I told my students too, yeah, I think it was here. Was it here? I told them. So I was like, okay, I was like, let us all open Deriv. So I will start dropping the signals as well, which I started giving them too. And I started giving them the ones I get in and all. And after that, we did another 350 withdrawal, making how much, guys, you can calculate. So I told them synthetic is just dashing me money for weekends. And I feel like, so now look at this. I said no single setup came to my zone on spot forex throughout the week. So I was just being busy with synthetic because I had nothing to do. So I am that disciplined. If the market does not come to my zone on forex, I will stay in my hands. So I was using this to just, make sure I'm not just bored and I find the market to look at and do. So like I said, from $30, you can see how much I've withdrawn. And we are still looking at it. You understand? I'm still observing. So I told them, open this and so I explained. So this was when I did the video you're about to watch about what I do, which I am giving to everybody, and not just them. The reason why I'm doing that is I want everybody to learn. I want everybody to learn. And it's been a while I've released an educational video, like I said earlier. I just want to give a gift to everybody. Please feel free to practice and see if it works for you. Then you can use it in the market as well. And if you feel like you want to learn what I do, you want to join my group, you want to trade with us as well and learn everything I do and everything I know, in-depth teaching, reach out to me and I'll be more than happy to help you. So guys, sit back and relax and enjoy the trading, the group sessions, and I'll see you guys next week. So you might need to check your weekly and your monthly on your MT5 that you downloaded on your PC. Or you can even check it on that of your phone just to see what the general trend is on that trend frame. But even without that, generally looking at this, we can see this is an uptrend because it keeps breaking highs. We have an high that was taken out here. An high was taken out here. The market came down low, broke another high, right? Market came back to the demand zone, broke another high, right? And
Yes,
came down to another demand zone. And I think it's on its way for another high. The only difference here is it didn't come for a demand zone. It did a support and resistance move here. All right. This was support here, broken, retested as resistance, broken, retested as support, and it keeps moving up. So it is an uptrend. So what do you look for in an uptrend? You look for buys. It's advisable you look for buys. We took some sells here, right? Because we knew this was coming down. There was a trade I gave you guys. There was a trade I gave you guys where we took some sells on this V50. Volatility 50 is my best pair because I like the movement. It's moves correctly without manipulation, like the Forex market. Look into it because there is less manipulation of the market. The market does what you are expecting easily, and you don't have the fear of getting spiked out, then the market goes your way if you know what you are doing. So as I was saying, if we look closely from this trend, this keeps breaking highs, right? It keeps breaking highs. Forex market is either where you have a movement going in the upward direction, retracement, movement breaking that last high, right? That's when you now see something like maybe support the resistance or demand zones created, stuff like that. A lot of concepts used in the market. We have people that trade mainly support and resistance. We have people that look forward to demand zone. You just have to pick the one that, but most likely the market will retrace to demand zones than the support and resistance. Just like the example I was giving here. When this market was breaking, when it broke this high, it came for a demand zone, not like it respected this support and resistance area here. I don't know if we get what I'm saying. This was a support and a resistance. Normally, if it's just mainly for support and resistance, it's supposed to just come here and keep moving. But no, it came for a demand zone at the bottom. So most likely, it is going to come for demand and supply zone rather than just the support and resistance. In our binary, we use the support and resistance more because it is a 5 minute, 10 minutes, 15 minutes trade. You understand? But in Forex deals with supply and demand zone. So what will make a supply or demand zone qualified for you to even wait for the market on it? I did a video about it on the videos you guys have access to. Number one, it must have imbalance above it, giving it a space, a candle that is not balanced. The two candles, the candle before and the candle behind, are not meeting each other. I will show you an example just now. Number two, there must be impulse after that demand zone was created. The impulse to break the, maybe if in an uptrend, it will break the high. In a downtrend, it will break the low. Are we together? Then number three, it must clear liquidity first before breaking the high or low. If you can see a demand zone that meets these three criteria, then you are free to take that demand or supply zone. So like I was saying, you either have an uptrend or you either have a downtrend. It's as easy as that. So what do you look for in an uptrend? You are to look for buys only. What do you look for in a downtrend? You are to look for sells only. But that doesn't mean you can't counter trend or see a good sales on an uptrend that's giving you the confirmation and you are expecting a retracement already. I think we took a sell on this volatility at some point, but then, so let me remove all the drawings. So on the daily time frame, what are we seeing? This was the last move that we have. So what I would do, what I normally do is I will take the high, right? Daily high, and I'll take the daily low. Right? So this was the last move. This was the last move that broke this structure. So I'm only interested in this area, which is telling me the market is on an uptrend. It just broke a structure. And we have a support and resistance play in motion. Markets use this as a support, a resistance, and now is using it as a support. So we are clear to look for buys all the way up here. So seeing this on the daily time frame, this is just all I could figure out. So I go to the 8 hours. What can I say on the 8 hours? Still pretty much the same thing. This was the low of the 8 hours. So I'm now particular about from here to here. So if I use my Fibonacci from this low to the high, you could see that that retracement came for the 71%. between this 61 to 71 area, right? So the reason why we got in on this buy, I got in on this buy and I was able to get this trade is the moment I saw that this market came down here, and this was the last high before it came to that zone, right? So on the 4 hours, you will see it more clearly. Okay, so this was the last high that created this low that entered the zone and clear out this liquidity. Are we together? So what I will be waiting for after that is for this high to be taken out, which was done here, right? So immediately it was done, I'll be looking for an area around there the market is going to retrace back to. You might not see it quickly here, but I think on the, was it on the 30 minute I saw that trade that we took earlier? Yeah, perfect. So on the lower time frame, you could have gotten this trade itself because you would have seen this high as a last high that created the lowest low. It got taken out and it gave you a good demand zone, this little red candle here. And what did the market do? Came back for it and moved. But let's say you even missed that. Yes, let's say you missed that. Then that's when you now come to, I hope this is not the one we are expecting the market to control right now. No, no, no. Yeah, that's when you now come to this one. Look for that last high that created the low, which is this high, right? After it was taken out, you look for your demand zone, which is this little red candle here. You could see that the market actually came for this area before moving higher. So let's even say, okay, you missed this move down here. This is another clear confirmation after this high was taken out. The markets gave you another demand zone here, which it came back for, right? So there are so many opportunities you could have used in getting into different trades. So let's now say I am not even looking for the trades that have happened. I'm actually looking for a trade right now. Let's say I'm just marking up to look for a trade right now. So what I would still be considering is on the 8 hours, I'm still on an uptrend. So let's continue. I'm still on an uptrend. So what's the last thing I see just around here? I see this high that was taken out. So I go to the 4 hours. That's the last thing. And it's closed with a full body candle, telling you this is actually really. So like I told you, what will make a good demand zone solid? Number one, it must clear out liquidity. You can see this low was taken out by this candle before breaking the high. That's one of the confirmations of demand zone. So number two, we have to look for imbalance now. Where is space? Where can we find space? Where can we find the imbalance? At times, you might not see it until you go to the lower time frames. You might not really see it until you go to the lower time frames. So if we check here, guys, you can see that this candle and this candle are not meeting. So we have imbalance here, making this our little indecisive candle as our prospective demand zone. Are we all together? So liquidity was swiped, imbalance was created, and a high was broken. So because of that, we can go ahead to even use our fib to see the area is 88.8%. So what are we looking for here now, guys? You can do the risk entry, whereby you just take the trade right here, your stop loss just above your demand zone, right? And your TP at that high that was created before the retracement, right? This is the risk entry. Well, I don't really put a lot of money on this risk entry straight, right? What I do is I now go to the lower time frame. So I'll go to the lower time frame. And I will look for the high that was created before the move, which is this. So all I will do is wait for the candle, wait for the break of this high before I even take the trade. Number one, it will reduce my stop loss size. Number two, it has given me another confirmation that the market is fully ready. Now, I will tell you the reason why I would be careful there. If we look at this, guys, after this low was taken out, can we see this little candle right here? There are times the market, because of these two equal lows, there are times the market will not just reverse here. It will come all the way down here before reversing totally. So in order not to be caught off guard with this little deceiving move, showing you as if it's ready to move, I will wait for the break of the last high that created the low that entered my zone. We'll wait for the last high that created the low that entered my zone. So, okay, I think it's better we use this candle. Yeah, I think this is more like it. So we can see this imbalance. This candle and this candle did not meet, and these two did not come back to fill up this. So we can say this is still a demand zone down here. So the market can decide to respect this one, or can come all the way down, swipe out all these stop loss to come in before moving. So either ways, is either I wait for this one. So if I'm going to take a risk entry, I will take it to that last move, that last area, which I know the market will not, if it goes beyond there, that means it is changing from an uptrend to a downtrend. So this one, I'm always free to take a risk entry with that last area. Or if it decides to use this area and break this zone, it will give me another demand zone with imbalance, liquidity swipe, and everything. Then I get in. So I've taught you two things now. What are the criteria, three criteria you have to look for to validate your demand and supply zone? Liquidity swipe, imbalance. Then after the imbalance is created, the move, we have an impulse that will break the structure. It will have an impulse that will break the structure. Just like this, see, this was the last low. This is why this is validated. This is why I am willing to risk this entry, because this was the last high that created the low, right? Liquidity was taken out. This low was taken out. This was the liquidity. Imbalance was created, right? Imbalance was created. Then that impulse broke this structure here. So that's why this little green candle is validated. Okay, so there are two things in this trade right now. I'm waiting for this area to hold. If it doesn't hold, I have a liquidity here and a demand zone below too. The market left a very long time ago. A very long time ago. So you can decide at any time to come back to pick up the liquidity it left in these areas. So these might swipe us out too, which is why at any point in time, do not over leverage on any trade. So because I know there's still a last area down here, even if I'm going to take this last area of this zone before it broke structure, I would not over leverage. But let's say it now comes in here into my risk entry, moves in profits, broke structure, broke the last high, then I can look for another demand zone to get in on more entries. Do we understand? Volatility 75. I'm expecting a buy on it. So this was the last high that gave the low that swiped out all this liquidity. Can we all see? So after this high gave that low that swiped out all this, that took out all this money sitting down here. The move did what? Broke structure and gave what? Imbalance. These two candles are not meeting. So that is what validated this our demand zone here. So this little area, because of this imbalance, the liquidity that was taken out and the break of structure that happened, we are waiting for this candle to come in here to tap us in, and we go all the way up together. So I have these two trades I'm waiting for, guys. Feel free to join in if they are in the zone. That's what I'm waiting for. So volatility 50, if this doesn't hold, this will hold. Volatility 75, this will surely hold. And I think that's pretty much everything. Do I have questions? So look at this too. Why did I have this demand zone here? It gave me liquidity here that I know it was going to swipe. This was the high that created the low. Liquidity was taken out. There was imbalance and it broke this structure here. So, and here too. So I knew the market was going to come back to tap into it and do what? Move. Same thing for this little area too. I am not sure yet, but I'm trying to see if the market can come this low. So in these two trades, I will not even be bothered. So it's either the market comes for this area because it's still an uptrend, or it comes for this area. So those are the two areas I'm waiting for 25. It's still an uptrend. Still an uptrend. And it has created liquidity above. So it will either respect this or this. But I'm not even bothered. I'm not even. Oh, this one is ready. Volatility 100 is ready. That's broken structure. On the lower time frame. Let's see if it will take out the 5 minutes low. So guys, I just said, oh, let me come here, make this video for you and take your questions. If there is no further question, I would edit this and make it ready for you guys. Feel free to reach out to me and I'll see you guys next week Sunday.